We have a very special guest with us live on set. Mies Schneider's here, Director of Trading Education and Research over at MarketGauge.com. So nice that you're able to join us in person. Thank you so much for being here. Let's start off with the markets. By the way, this is her other book, Plant Your Money Tree, and she's working on a new book, so we'll be watching for that, Mies. But tell me what your thoughts are on the market. This volatility is making people nuts.
But it is completely expected, considering that we're in a situation that really is sort of uncharted as far as where the Federal Reserve is compared to inflation, compared to the extreme overvaluations that we had in stocks. The PE ratios were completely skyrocketing, with everything else skyrocketing at the same time. We're at a point now where people have to really reassess how much stock they want to own at these high valuations, given the fact that the Fed is not only hawkish, but with CPI, PPI coming up this week, what's going to be the inflation narrative going forward and what the Fed will do about it. So this is a mass exodus to the exits, with a knee-jerk buying every time there's a dip and a little bit of a downward move in the yields, because people go, it's the bottom, and that's going to continue creating volatility.
And the thing is that since 2009, we've really run up so beautifully. So, people forget this was a real bull market for so long, a secular bull market, whatever you want to call it. But we had the dip in March of 2020, but it was so fast. It came, it went, people bought, they made tons of money into 2021. And so it's hard for them to understand or navigate at this point. Now, what is your big picture? Are you saying that people should stay in the market or take a little off the table, take some profits maybe? I mean, in the long term, you're still a believer in the market, right?
Well, I think right now the definition is what's the long term. And to your point about going back just a little bit in history, it was pretty obvious that we were going to reach a bottom in 2009 when we saved the banks, when QE started. Again in 2018, when we went down for the taper tantrum, the Fed came in with the flip. Then in 2020, when we had COVID, but all of a sudden we had a lot of stimulus money and a lot of bond buying by the Fed. So the question right now is, what is going to indicate the bottom? And if it's going to be some good old-fashioned growth, like we haven't really seen since the 50s or 60s in the United States, we could be waiting for a while. And that, I think, is my biggest concern right now, is what is the bottom and where do we start piling into stocks again? Right now, we are heavy into cash.
I see.
Even a lot of our commodities positions have sort of...
And that was something you liked. You liked commodities.
And I still do. But right now, they've taken a pause. And it's interesting because if you just look at gold, which is the pinnacle commodity and the last one to run in every hot inflationary period, it touched down right on the 200-day moving average today. So for the first time in a while, you have a real line of support to use as a risk factor after the CPI comes out, if gold starts catching up.
Well, let's go over what you like. Commodities is something you like. Right now, gold's at $18.43 a troy ounce. We've been watching that. You've talked about that. You said biotech, some of the medical devices and consumer staples, you thought those were okay. And then you actually had some picks for us that you were bringing today as well, ETFs. Tell me a little bit about that.
Well, actually, one of the things I wanted to talk about is China. Because I did a lot of research about China and where they were compared to us during different pinnacle monetary cycles. So in 2008, China bottomed in actually October of 2008, just as the U.S. was going to start to crash. So that by the time 2009 came around and we started to go back up, China had already way outperformed. So now if we go to today, what's happened is that they already tightened China in 2021. They've also had other issues, but that's mostly around the tech. And now here we are in 2022 when they're actually starting to ease to try to stimulate the economy. It's possible that FXI...
which is what we're looking at here. That's one of your picks.
Right. It may have bottomed, as you saw on the chart last month, while even though it's come down with the pressure of the market, it may not test that lows. And if that's the case, if we get any kind of even remote stabilization in the U.S. market, I think China can really start to pick up and outperform again.
And MJ?
Well, I'm fascinated by the cannabis space. I don't think I've ever seen well, I shouldn't say ever seen, because we've seen.
It is fascinating.
Yeah.
People are getting tired to wait for it, but for 5 years they've been waiting for some big, great numbers.
Exactly, and
Go
that's
ahead.
because the legislature's not really behind it yet, even though Janet Yellen herself has mentioned that she is actually for regulating interstate banking
Right.
for cannabis. It hasn't happened yet. But yet it's become more and more popular as something that's being consumed as actually a staple.
Right.
And we can even call it a commodity in a sense, right?
Yeah.
So I keep waiting for this to turn around. Hasn't happened yet, but I
Yeah.
think at some point it will.
Last but not least, the names that we love to talk about: Facebook, Apple, Tesla, Microsoft. Are you buying dips? When would you buy into some of these names?
Well, I don't really consider this a dip. So I'm going to wait, like I said, for an absolute
What would you
reason.
call this? What's going on here? Because this is more than a dip.
Yeah. I would say this is massive liquidation based on everything we just talked about, where we have crazy PEs at the same time, growing money supply at the same time, so much of our GDP is debt. At the same time, we have high inflation. So this is really just, I think, a major correction to find what actually makes sense. When we get to that point, and I wish I could say, oh, it's going to happen next month. It could be 6 months. It could be a year. It could be 3 years, actually.
Yeah. Oh boy.
The big stocks like Tesla, Microsoft, like Apple, and even Facebook's had a nice comeback, would be still really great places to park your money, because no matter what happens, those companies are going to stay solvent, as opposed to some of the ARK fund companies that might.
Oh yeah, I understand what you're saying. Well, those are a lot of disruptors and growth names, and don't really have the, history, historical, metrics for people to understand fully.
Exactly.
But it's very exciting to see you in person. I'm so glad you were able to join us. Mies Schneider, thank you, of MarketGauge.com, giving us a good look here. Some of the names she would consider at this point.